Mr. Ed Yardeni, and he joins us this morning. Ed, I got to go to you on Bitcoin at 93,000. How do you invest or speculate in something where there's no underlying, there's no profit, there's no free cash flow, there's no history of gold? How do you do that, Ed Yardeni?
I guess you just have to be a believer. It's kind of a faith asset. The view that there'll be more and more buyers of this particular asset just keeps driving it up. And I guess in terms of trading it, all you can really do is be a technical analyst. There's a little consolidation pattern there. Then Trump wins and it goes straight up. So,
Right.
I think a lot of it's news dependent. And if the news is favorable, it goes up. That's kind of the story.
Ed Yardeni, America's turned upside down. Republicans, Democrats, independents. We're going from press release to press release, some thrilled, some not, etc. Ed Yardeni, how do you invest in this if you have a minimum time hold of 3 years? How do we emotionally get through the political maelstrom?
Well, I think first and foremost, it's pretty well known that the best way to invest is to ignore politics, or at least not let your personal political views influence your stock portfolio. Market tends to go up, whether it's Democrats or Republicans in the White House. I guess sometimes we have to be a little bit more specific about the extent to which they're also the same party that's in the White House is also in Congress. But all in all, the market it's PE times E, and as long as the earnings outlook is for more growth, and the longer is that outlook for growth, the higher the PE, and that's kind of the environment we're in right now.
So, Ed, how did your outlook on this market change, if at all, with the election last Tuesday?
More bullish, not for political reasons, but simply because I think animal spirits have been unleashed. Trump is definitely viewed as being a more pro-business president than Harris would have been. He wants to cut taxes again on corporations, as well as cut some taxes on lower income workers. He wants to deregulate. And then I think the market is also excited about the possibility that some of these intractable geopolitical crises might have a chance of getting resolved as kind of Trump does his deal-making magic, perhaps between Ukraine and Russia, and I don't think it's going to be deal-making in the Middle East. I think it's going to be sort of a free ticket for the Israelis to take out Iran.
Ed, are there any sectors that kind of jump out at you that might be particular beneficiaries of this new Republican-led government?
Well, I'm not too creative here. I'm still recommending the same sectors that we've been recommending for a while here. 3 out of 4 have worked, 1 hasn't, and the recommendation is to overweight technology, including communication services, kind of counting that as one sector. That's worked extremely well, and I think should continue to do well. So we'd overweight that. Yeah. Industrials has done very well. Financials, and the only clunker has been energy.
And Yardeni, give me a Mag 7 update. Dan Ives is in the house. He's been the acolyte of Apple forever, Planeteer forever. Take a sector view on Mag 7. Can you add shares here? Do you hold? Do you lighten up?
Well, I think lightening up hasn't been a wise thing to do. Though
Thank you for pointing that out.
Though everybody's scratching their head about why Warren Buffett's getting out of Apple.
Why is he getting out of Apple, Dr. Yardeni?
That's one of the great mysteries of life these days, is why he's scrambling to raise so much cash. And one of the interpretations is he knows something, or he thinks he knows something about things turning sour pretty quickly here, and he likes to buy things cheap. And it may simply be that he just views it, not only doesn't have anything to buy with the cash he had, but some of these assets that he have appreciated to such an extent that he just wants to roll it into cash. And the cash, by the way, is looking pretty good. It's still yielding 3.5% to 4.5%. So I think it's an inscrutable situation, and I can't, for the life of me, figure it out. I guess after the fact, if everything blows apart, we'll say that Warren Buffett
Right.
was the only one who saw it coming.
There was a wonder child out of the Midwest pre-World War II, and he took some exams, Paul, out of the blue to get into Harvard without applying to Harvard. Harvard took him full scholarship, the whole thing, sterling career. And he ended up at a small school in New Haven. And James Tobin, even if you disagreed with him, was always this light of intellect and size. And he is the one in 1977 with James Meade who said nominal GDP matters. This was revolutionary at the time, to this day, hugely controversial. Ed Yardeni carries his spirit forward by looking at animal spirit, which in the definition of Bloomberg surveillance is real GDP plus inflation. Ed Yardeni, what would James Tobin say about the new animal spirit of a Trump administration?
Well, I think he would approve of the concept, though not necessarily the context in which it occurs. I mean, animal spirits was a phrase that was concocted by his hero, which is John Maynard Keynes. And John Maynard Keynes described it as spontaneous optimism. And I think Tobin was very much of a liberal and a Democrat, so I think he would prefer to describe animal spirits as occurring under a Democratic rather than a Republican administration. But he was objective, and it is what it is. I mean, we have seen so far spontaneous optimism, animal spirits, with the election of President Trump. Some of that may be that the election turned out to be not even close. It wasn't contested. So it was over with and done. But on the other hand, Trump's policies are good for nominal GDP for the most part, though there clearly are some potential negatives.
When you work with Eric Wallerstein on this and you get to the roaring 20s of Ed Yardeni, is it as simple as we underestimate revenue growth at American corporations?
Well, I'm not sure that the revenues is the issue. Revenues, I think, are going to be okay, but revenues are generated on a global basis. And while the U.S. economy looks pretty good, actually stands out compared to the rest of the world, China, Europe, some of these other areas look pretty weak. It's really all about earnings. The profit margin is going to automatically go up when Trump, I think one of the first things he'll do is get through Congress a cut of the corporate tax rate from 21% to 15%. And then deregulation is a known unknown. We don't know how much of it will occur and how much will be reflected in profit margins. But, oh, by the way, before the election, we were still talking about the roaring 2020s, figuring that productivity is going to make a comeback no matter who's in the White House.
Ed, is inflation a concern here? I think some folks are concerned that tariffs, number one. Number two, cuts in tax rates could fuel inflation. Is that a concern of yours?
Well, I think on balance, when you include the potential for deregulation and tax cuts, that may be sort of a wash. But yeah, I have to be concerned about it. We all have to be concerned about it. The bond market's certainly concerned about it. My friends, the bond vigilantes, have taken the bond yield up by about 70, 75 basis points since the Fed cut the Fed funds rate by 75 basis points. So somebody's wrong here. And the bond market's basically saying no mas. We don't need any rate cuts because the economy is doing well, and the so-called neutral rate is higher than Fed officials believe, as evidenced by the strength of the economy.
So, Ed, what do you think the Fed will do, and what do you think the Fed maybe should do?
The Fed should do nothing, which is what they should have done last week, but they just won't listen to me. I don't know why.
Damn, what is that about?
They've got their own agenda, and look, ever since Jackson Hole's the speech that Powell gave was extraordinarily dovish. It was almost wokish, reminiscent of the kind of focus just on unemployment that we had before the inflation surge of 2022 and 2023. So I think we are seeing some stickiness in the inflation rate, the so-called super core inflation rate that not too long ago Powell said was a key number, suddenly is ignoring that.
Ed Yardeni, we got to get it on the record. You've just been, without question, the equity strategist of the last 24 months. I got futures at 6,022. Remind us, Ed Yardeni, where we are with your 7% growth rate in 1, 3, dare I say, in 10 years.
Well, when Trump was elected, we thought about it. We thought about the animal spirits and what could happen to earnings as a result of the profit margin, and we turned more bullish. The reality is we haven't been bullish enough, and we've been among the most bullish. But so now we're looking for 6,100 by the end of the year on the S&P 500. That's almost a layup. And then I think we're looking for 7,000 by the end of next year, and 8,000 by the end of 2026, and 8 to 10,000 by the end of the decade. Probably closer to 10 than to 8.
Right. I want you to fold this, folks, of Dr. Yardeni with Dr. Manel yesterday, to have Alicia Manel on yesterday on the failure of our retirement plan. And yeah, we got to put more money aside, but mostly what we have to do is listen to Ed Yardeni. If you're scared stiff, you're in cash, you're in bonds, maybe you can get the confidence of Yardeni by looking at 3 years and 5 years carefully to the kind of vector, the kind of glide path he sees. Ed Yardeni, thank you.